Everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, dollar yields, precious metals, and commodities and ETFs that I follow. If you need any help with anything, check out finding-value.com. That's where I talk about individual companies. If you guys need any help with anything, discounts, the coupon code. We do have a 7 a.m. question and answer session coming up on Saturday, Mountain Standard Time, if you want to interact with me directly. So let's dive in. Let's see what's going on today in the markets. And what I'm seeing is a lot of volatility with yields. My Lord. We've been moving back and forth, up and down, all over the place. And I did adjust this differently. Maybe this is still a flag pattern that we are going to launch to the upside with yields. So with yields going up, that would mean that the dollar generally follows where yields go. But the dollar, strong today, 0.4%, and we're getting lots of volatility here the past few weeks. We're getting a lot of volatility with yields too, massive volatility with yields. So it still looks good for the dollar to, I'm going to say this, short term, we've got conflicting things. And why I say that is we have a large selling pressure day there. That generally, when I look at this, generally I would say this is going to go lower. But today, that defied all of that I usually see in the markets. And we were up today with the dollar, which is surprising to me. I would have guessed that this was going to go lower. Now, I'm not a short-term trader. And a lot of the times in the short term, there's a high probability that you get it wrong. And that's why I don't trade the short term. And that goes for anyone who applies these techniques. So looking at yields rocketing up. Another thing that I would have not guessed with this type of strength of how much this went up, 2.13%. We've been going back and forth in this entire area with very strong up and down movements. And that's probably deals with the liquidity in the market, which there isn't much. Can't be if we're moving over 2% down and up days regularly. So we were up dramatically, up over 2% today, 2.13. And you can see this blast off move towards the end of the day. With yields surging. Now, to me, when you look at this, you've got a channel, it's broken to the downside. Now we're looking, is this going to break to the upside tomorrow? We'll find out. Momentum's to the upside. We'll see if we can break. The problem with the volatility in yields is this is the stuff that prices everything in the market. And we are just moving up and down greater than 1%. Well, what are we at? We were at 5.2% down to 4.8% in a heartbeat. And now we're back up over 5% on the 2-year. Pretty good volatility there. The 10-year also ripping 2.37% today. And again, the big picture view obviously is we're going higher with yields. But, are we going to get a pullback here? Is a slowdown in the market going to pull yields lower? Right now, we're just getting a lot of volatility in this circle here. So momentum still to the downside, but today, we could bounce here, and we'll see if we put in kind of this, it'd be a shoulder, head, shoulder deal. And we'll see if that comes into play. I'm just guessing what the pattern could be, but We'll continue to monitor it. And the 30-year also up 2.6%. That's a big move for yields. TYX TNX ratio slightly higher, not hugely higher, only up 0.23, only a slight tailwind behind gold. That's all we're getting today is just a slight tailwind. Bond prices getting smoked, and we're just getting massive volatility over here. There are days where we gap up multiple times, gap back down. Today, it was a pretty strong move to the downside. But again, is this a shoulder, a head, and then eventually get a shoulder with a neckline, something like that? Maybe. We'll monitor it and see what happens. And then on the 2-year 10-year yield, we were down just a little bit with the curve uninverting a little bit, but we're still on top of this curve at the moment. Gold barely higher. I'd like to see some sort of reversal candlestick down here, and we'll see if we get one. But gold's on top of support, and if the yield curve uninverts, I think gold's going to do well. I think silver and platinum will also do well. Is this a shoulder, head, shoulder that is developing in the short term in silver? Again, we're going to have to wait to see, but it does look okay in the short term for that to occur. But if things come off the rails a little bit, we could head back to the low 19s before heading higher. Platinum down 1%. Again, I don't jump in front of these moving trains with this much momentum. Let it dissipate and let it tell you when it wants to turn around. To me, this looks like a false breakdown before heading higher in platinum. And if you can get a good buy point in the low 800s, perfect. If not, we'll see a turn. And if it turns, I'd buy into that strength is what I would do. Palladium down massively, down 6% today. And again, this is a falling wedge deal. I think it can get back and touch this support line in the low 900s. That's that support line that goes all the way back here. So I think it's possible. And what this is kind of a false breakdown slingshot that might slingshot higher. But again, we'll see. And I think we could see further downside in this before slingshot and higher. So XAU to gold ratio still coming under pressure, down 0.7% with the gold and silver mining companies underperformed gold. Gold was barely up today. So just a little bit of sell-in pressure in the gold and silver market. Miners. CRB index flat. So we're flat today. We are kind of popping down here. Again, this could be a false breakout. So just, I wouldn't, this thing can go kind of anywhere because we've got mixed data. This could drop a bit or maybe even come somewhere down here if we get a slowdown in the market. And I say if, we are getting slowdowns across the board. It's just how much of a slowdown, what does it look like? We know home sales volumes have come back. And that's why trading the short term is really difficult unless you get all these indicators to align, either saying full sell or full buy. And right now they're all mixed. The housing market is still underbuilt. That's generally where inflation comes from. And that's where the CRB index moves up, is when you get inflation. And right now inflation's cooled off to some degree. And we've seen a slowdown in lending volumes, which is where the credit creation is. We know we're not doing stimulus, we're doing QT, but there is some deficit spending going on that can be considered stimulative. So we've got kind of a wide array of data out there right now, pushing this stuff all around. The CRB to S&P 500 looks like it's trying to put in a bottom here. Maybe we can get a little bit of a move higher. That is a bullish engulfing pattern that we've got here, much like that one there. We'll see if we can go to the upside. GDX down slightly. I'm just kind of looking at this chart, seeing if there's anything else to comment. We're just underneath resistance. Same with GDXJ, underneath resistance that's above us. And then SILJ's down a little bit. And it's got some work cut out. And again, I'm surprised at how low that this has gotten. I'm surprised at how low silver is right now, even with the inventory levels where they're at and the market conditions kind of turning around. I'd start to see, some of these start to peak up, but they haven't. Crude oil up about 0.3%, but we've got some pretty good momentum to the downside. Again, I would wait for a base. I'd wait for this to turn. I still think this could go lower with that momentum. It's got to work that momentum off. So a lot of the times I see it move sideways to work momentum, then you work your way up. The entry points when it goes sideways, not necessarily after a strong selling pressure, because we could be mid-move where it ends up at a lower level. TTF gas, this one still looks good. We're above support. This is your basing pattern here, squeezing up. It broke out, and I still think we're going to head higher. We've got a bullish engulfing today. Natural gas back to its support level, and we'll see if that support level holds. We're getting real close to it, but we're in an uptrend momentum fashion. XOP, yeah, you know me, heading a little bit lower, down 0.7%. Today, we snapped our neck on the neckline up here, and we are pulling back. We do have support underneath us, but it's down around $130-ish, 131. Again, I wouldn't jump in front of this. Let this thing kind of base out first or wherever it wants to base before I would jump into it. OIH moving sideways, up slightly today, but it still looks good on a long-term basis, and it does look like a little bit of a flag pattern. These stair-stepping patterns that we get. We're just doing another one. So this is the Sprott Uranium Trust. Surprisingly, it's pretty strong today, and let's hope that momentum can continue. That is a downtrend line break today, so that's positive at least. URA up. I wouldn't say it's a trend line. Well, it could be a trend line break, but it's still floating on higher. URNM, same thing. Looks like we are consolidating, but be careful here because we could punch out downward. And again, the short term, guys, this is what happens. You get a mixed outlook on the macro, and lending kind of slows down. You're like, okay, which direction is this going to go? And a lot of these are late cycle performers, so they continue to run for a while. And I'm going to ride through it because the housing market is still underbuilt. So even if we get a slowdown in the short term, the longer term still remains good, in my opinion. But moving sideways on URNM, moving sideways on URNJ, we'll see if this can turn around or if there's further selling pressure. There's no definitive bottom here yet. TAN, still going down. Again, I wouldn't jump in front of this train. Too much momentum. Let it dissipate first. COPX also heading lower. Well, it was up today, but it's heading lower, I think. Too much momentum. Let it base out. We've got strong support in the $30 range. Lithium heading lower. Again, I wouldn't get in front of it. Below the downtrend line. I wouldn't touch it. And REMX, same thing. Wouldn't touch it right now. Wouldn't add. We're below. Momentum's to the downside. We could see further downside in our EMX, the rare earth metals. The S&P 500 looking like total garbage, right up against resistance. Like I said, here is the bearish engulfing today. We could see downside pressure with the S&P 500 right here. NASDAQ also getting the pukey bearish engulfing, which generally heads lower. So a little bit of selling pressure happening today and most likely will continue into the future. KRE also getting the nasty bug, heading lower. Maybe it's going to do a full retest of this breakout. But with yields going up, I don't think it's going to like it if yields continue higher. So a lot of these are going to be yield dependent. If yields continue up, I think pressure to the downside for S&P and NASDAQ, and potentially even for regional banks and home builders. A little bit of selling pressure in emerging markets, down 1%. Doesn't like the higher dollar. Doesn't like higher yields. And XHB also getting a bearish engulfing, which could head lower in the short term. Higher yields, higher dollar. Home builders don't like it, the index. MU also getting a little bit, the bearish golfing. Could head lower with the S&P. I guess this is also tracking yields to some degree. And that's what it looks like at the moment. Again, the bearish engulfings, they generally head lower. Momentum's to the downside. Copper down slightly. There's no follow through here either. It's just sitting there doing nothing. Somebody wake copper up and tell him or her which direction it wants to go and make a decision here. Generally, copper tells us which direction. If this falls, most likely we're going to see a slowdown in the market. If it pumps back up, maybe things are doing all right. Iron ore, still looking good. Still looking good. I think we're just going to continue to work its way on up over time. Nickel, this thing's all over the place. Not going to comment on it. Aluminum down right at that resistance line. Again, we've been slamming support, resistance, support, resistance, support, resistance, support, resistance all over the place. There we are doing that. Baltic Dry Index down slightly, but that still looks okay. Lots of bullish candlesticks in action before this, so I still think we could go higher here. Newcastle coal up 1.2%. It looks like it's trying to make a base here at some point and finally break that thing, so it's looking all right. This is cheap, and with natural gas where it's at and TTF looking pretty good, I think coal looks pretty good down here. Bitcoin ripping it up 2.6%. It does have a candlestick, little wick at the candlestick at the top there. Could be a little bit of a slowdown. This is what we saw, a big move up and then a large selling pressure move. A lot of the times these can be kind of consolidations where they could head lower again. Anything with big wicks at the top are generally little short-term topping patterns. And then Ethereum, it's just going full ballistic here, up 7.7%. Breaking through a lot of this resistance going across here. So it's busting to the upside. Hopefully momentum can continue for you Ethereum investors. But that's what I've got for today, guys. And, you know, momentum-wise, looks like to the downside in a lot of these different sectors. Oil, I know there's strong demand. I get it. But when you see charts like that, stuff can still kind of puke to the downside. The S&P doesn't look too hot. The NASDAQ doesn't look too hot. Some of these other sectors, they're underneath resistance. They don't look too hot. And honestly, guys, I just kind of wait for this stuff to kind of settle out. Maybe we are in a slowdown and we're experiencing it right now. And I'm not talking about GDP. I'm talking about the volume behind lending. GDP, they can mess with that number. They can print money. You know, there's inflation in the system. People have to spend more just to live. I get all that. But in terms of volume of loans, that's the only thing I keep looking at. Volume of loans and housing starts. That is where your credit growth comes from. And they've slowed that down. They've slowed that down. And it's like, okay, then we just look at charts and things are starting to kind of come and pull back. Does that mean that we get a full-fledged crash? No, that's not what I'm saying. But we can get a slowdown and we'll see how things react. Maybe rates get pulled down. But again, rates were pretty resilient today. So we've got data going like this all over the place in the short term. So what we're going to do, nothing until we see a direction. That's what I would do. Do nothing until you see a direction. Gold still looks good. Silver still looks good. The yield curve hasn't really uninverted very much. Things are kind of just sitting there waiting to paint the picture here. So that's what I've got for today, guys. We'll catch you next time. This is Finding Value.